Hustleshare podcast is sponsored by Lark, the leading super app for work in Southeast Asia. Frustrated with juggling and paying for multiple tools for work? Hate mixing personal and business messages? Improve your team's productivity by 10 times with Lark, which combines business chat, email, video conferencing, calendar, project management, real-time translation, and much more into one super app. Trusted by companies like Xiaomi, Glintz, Kumu, and Mamalu's. Get it for free at larksuite.com today. And also by Uno Digital Bank, a full-spectrum digital bank, licensed and regulated by the BSP. Manage your money and maximize its potential growth with a secure and trusted bank that fits right in your pocket. Open a savings or time deposit account, pay bills, shop with the Uno Virtual Debit MasterCard, or apply for a loan in the Uno mobile app today. This podcast is brought to you by Salmon, your trusted source for all your financial needs. Whether you're looking for easy financing with low down payments and fast approval, or seeking high returns with their 8.88% interest on time deposits, Salmon has you covered. Visit salmon.ph today and discover how they can help you achieve your financial goals. Rural Bank of Santa Rosa Laguna Incorporated is regulated by the BSP. For any concerns, email consumeraffairs@bsp.gov.ph. Deposits are insured by PDIC up to 500,000 pesos per depositor.
At the same time, the market is still so underpenetrated that it's much less about I steal your customer, you steal my customer. It's more like let's build this market and expand from where we are today to a size that's much more in line with where we should be, right? Yep. Because if you look at so again coming back to the macro, so retail credit penetration, so retail credit volume as percent of GDP in Philippines is at around 5%, whereas in say Indonesia and Vietnam, it's twice that, right? Ooh. And these two countries are at a very similar stage in terms of GDP per capita.
Welcome to Hustleshare, the podcast that features the daily grinds of unique hustlers around the world to show not our differences, but that our hustles are very much alike. Now here's your host, Ronster Baetiong.
Welcome to the latest episode of the Hustleshare podcast. We finally got this guy. I've been bugging him like an annoying guy for the longest time, but I'm not mad. I know he's busy, and the proof is in the pudding. You go to EDSA, there's little Kim Chu now in Cubao. That's they're wearing the BillEase shirt. But before I get carried away, let's welcome to the show Georg Steiger of BillEase. Whoop, whoop. Georg, welcome to the show.
Thank you. Thanks for having me.
All right. Thanks so much. And again, you guys are killing it out there. Amazing. So I'll just go straight. I forgot who told me. I'm not sure it was you, but a few months ago, probably a year ago, somebody told me that yes, BNPL works, but most BNPL are not making money and they're struggling. But there's an exception to the rule. It was you guys, BillEase. So now it's like, what? How are they? Since that exception, I was on a quest to really find a way to talk to you and put you on Hustleshare, because what you guys are doing obviously works. And of course, before it works, you need to talk about your hustle. So without further ado, I need to ask you the $1 million question. Georg, what's your hustle?
So we're BillEase. BillEase is a consumer finance platform based on the Philippines. We have been around for actually quite some time. So we started the company back in 2015 with two other products, and then launched BillEase, which is now our main product, back in 2017. So we've seen, I think, a very, very interesting time in the market. When we started, I think startup was not even a term that people really used here around the Philippines. Yeah. It was quite lonely back then. I think now market and ecosystem has developed quite a bit. and we're like super excited to see the momentum and to be part of that. Yeah.
All right.
But basically, what we do is we lend to Filipinos in what we call the emerging middle class. So, say our typical customer will earn somewhere between 15 and 25,000, maybe 30,000 pesos. Age somewhere between 25 and 35 years old. So yeah, maybe in their first, second job after graduating. And yeah, that's our customer segment. I think very fast growing and very exciting segment in the Philippines. And yeah, our average ticket size is somewhere around 3,000 pesos. So much smaller where banks would focus. But yeah, really the bite-sized product that our customers want and need. And yeah, we've had pretty good success with our customers. Customers are typically very loyal. So we have customers who have started with us back in 2017, and that gives us a lot of confidence that we have a product that actually is good for the market. Yeah.
And obviously, it's customers that pay, because you won't get here if your default rate is sky high, right? So that's good.
Yes.
You know,
I mean, it comes with the business, right? There's defaults. It's not like a mortgage business or something like that, but it's manageable. Yeah.
Right, but it's a risk that you guys have mastered. Again, I forgot who told me this, but yeah, that thing that BillEase is killing it. But before we talk about how you guys are doing it and how you guys, vividly described who your market is. I loved how you went straight to the jugular and defined who uses BillEase and how. I need you to buckle up real quick, Georg, because we're gonna have to go all the way to Europe and understand your origin story, because we're going to have to ride the Hustleshare time machine. All right. Now, Georg, I want to understand a couple of things. Like, every hustler has influences. Who are the very first influences that you've seen in your life that influenced you how to hustle, that left a lasting impact of how you do your work now?
Good question. So, I've been actually doing startup now for almost 10 years. Okay. Getting there, right? Mm-hmm. So it's a while back. But let me maybe start with a little bit how I got here, right? So, I'm originally from Austria, Vienna, but I left there almost 20 years ago. Wow. Did my MBA in the US. Met my wife there. Then we settled for a very short time in Switzerland for 2 years, where I joined McKinsey, which is a management consulting company.
Yep.
Then wanted to see a little bit more interesting growth-focused stuff, so moved over to Singapore and really worked throughout the region. And focus on banking, risk management, and then always had a little bit of an itch to start something of my own, right?
There you go.
So back in the days, I think the entrepreneurs you would look up to is like really the tech founders, right? Steve Jobs, then Elon Musk, all of these guys who basically really made a dent with launching a new product, a new category often, right? And reinventing the industry. And yeah, at some point I said, okay, if now I don't take the plunge and make the jump, I'm not gonna do it anymore. And then had an opportunity to start here in the Philippines.
Yeah.
And I've been here for 10 years now, and it's been a rewarding journey, I would say.
Perfect.
I think it takes longer than you imagine.
Yeah.
But I think on the other hand, you can also do more in 10 years than you think about. Yeah, when you get started.
Sounds good. Now again, I'll dissect this one at a time from basing it off your LinkedIn. Obviously, you grew up in Vienna, in Austria at least, or as well. I had a chance to visit the Austrian embassy and met the ambassador last year for a podcast that we produced that got an Austrian award. So shout out to the I've never felt imposter syndrome, like what the hell am I doing here? But hey, one of our podcasts randomly won an Austrian award, so that's great. But
I gotta listen to that.
yeah, the name of the podcast is called "She Talks Peace" by the mom of Iba Rasul Bernardo, who is Amina Rasul. There you go. She won an award last year through the Austrian embassy. We had a courtesy call. That's what it was called. A meeting with an ambassador is called a courtesy call. But yeah,
Nice.
I want to understand, what was it like growing in Austria first? So you gave us an outline of your career technically, and I want to do that. But entrepreneurship in Austria, is it something that's common? Is that something that you see a lot? Is this something that you aspire for? What was it like? And what's the tenets of because the German Austrians are very popular in the type of craftsmanship and the type of work ethic you guys do. What's that culture like, and how did you kind of bring that what you had from your roots to Asia?
Yeah. So I think it's a bit hard for me to answer because I frankly never really worked in Austria because I left very long ago. But so I studied law, but then midway through kind of understood that that's not really my passion.
Okay.
So I did a bit of IT stuff on the side, started coding. Actually left for a year, joined a startup as a developer. That was
okay.
during the first .com craze, so was interesting time to be in that segment. Then kind of forced myself to go back, finish my degree, and then but after that basically went into business. So did my MBA in the US, instead of then becoming a lawyer or something like that. And so never really worked in, say, a professional capacity in Austria. But I think the environment is very different from Asia, just because everything is a bit more established, settled. So the opportunities you can work on are much more specific, much more, I would say, narrow than what you can do here, right? Where you say, okay, the entire consumer finance or banking space for this huge part of the population is just not there, right?
Yeah.
Rather than say, okay, we'll launch a better credit card or something like that. Yeah.
Yeah, sounds good. Now, again, is it the big three or the big four? But once you get into the consulting company business, right? I've experienced to interview a lot of the founders here in the Philippines who are former BCG boys. Bunch of them. I can fill up two basketball teams, two handfuls, but former BCG boys. It's either it's a double whammy if you're from IS Manila and then you're BCG. Like, oh my god, you fit the mold. But from the McKinsey point of view, I want to understand, right? So each person that got into consulting as a job, and especially if you came from the big three, big four, right, leaves an indelible mark. And you, when you went to Singapore 2005, right, you were focused on banking in Southeast Asia, which is a totally different genre. We're not talking about the digitalized banking. And then you're now coming in here as a consultant to try to solve the massive problems. What were the problems that you saw in the region that you guys were trying to solve for while you were in McKinsey?
Yeah. So I did a lot of retail banking. So we did a bit on product, a lot on branch transformation. So making branches more efficient. A lot of risk management. So using a bit more advanced analytics than just the old manual underwriting or scorecards and so on.
Yep.
And I mean, when I looked at this market, of course, I looked at it through that lens. Mm-hmm. And basically the origin story, the founding idea was very simple. We basically saw that you have a huge market here in the Philippines that cannot be served the way that it was done back then, right? Mm. Because if you do manual credit assessment,
nobody's gonna pass.
It's just too expensive, right? Yeah. You can do it for maybe mortgage and car loans and so on.
Yeah.
But if you want to do a ticket that's, say, a few thousand pesos, right, which is really what a lot of these customers need, because you have someone looking at the paperwork, and then the branch takes the paperwork, right? It goes back to head office, then there's something missing. It goes back to the branch, right? By the time you actually reach a decision. You have spent already a few thousand pesos on this, right? And now you need to divide this by your approval rate, right? So if you approve 10%, you can multiply by 10, right? Because you've basically gone through the process for 10 guys and then you approved one, right? So that's just prohibitive, right? And the idea was that if you apply, digital processes, if you apply, more advanced models and risk management and so on, can you just automate most of that stuff and make it very, very cheap to assess customers, right? Great idea. Was sounds very simple and very good, but it took a while to.
Oh man, we're going to be talking about that a lot. Just for sure. If you started out that concept 2015, I'm pretty sure you made a lot of pivots and iterations to get here. But I now want to just one last question about the McKinsey experience that you had, right? One thing that's very stark about former consultants is how you guys understand macros, which a lot of local non consulting founders do not understand macros. And right now, the common theme that every single digital bank is saying is that there's so many people in the Philippines that are unbanked. But back in their day, I could just imagine like, wow, that was a wider majority. What were the biggest problems of the banking industry or the retail banking industry back then? And how did that even give you a glimpse of like, hey, all right, so if you're going to go and then look at the people's credit scores and whatnot, especially if it's a small item, it just doesn't make sense. So obviously that's where BillEase originates from. But what were these problems that banks were solving from back then? And I'm curious to know if that's the same problems that we still have now.
I think to some extent, these problems are still there, right? But it's getting much, much better, right? So just a couple of... So I think one is doing underwriting and risk management at scale and automating that, right? So I think there was a lot of innovation that happened in the market over the last 2 years. So now there's actually quite a few data providers for alternative data. There's a credit bureau that's now getting to a maturity stage where actually you can find most of the customers there, so your hit rate is pretty good. One big problem always was the number of different IDs that people carry, right? So automating that is not easy, right? And there's a lot of fakes and so on. So we have big hopes with the national ID finally being implemented, that will cut down also the fraud and the cost there, right? So I think on the one hand, things are getting better, right? So there's a lot of financial infrastructure being built by the government and by the industry that just wasn't there. On the other hand, you have new challenges, right? Like we've seen over the last 2 years a massive increase in fraud pressure, right?
Yep.
And not just us, right? I think every Filipino suffers from this, right? So yeah, new challenges, I would say. But overall, I think market is developing in the right direction.
Sounds good. All right. Now, last question before we take our first break. You obviously, when you do banking like this, and you've seen every single iteration across the bank and how siloed things are, but also very similar in nature. Why the Philippines of all the countries? You're already nicely in Singapore, of course, but in Singapore you have to think regional as a default because it's too small a market, and all the massive HQs typically are there or in Hong Kong. Why did you decide to move to the Philippines, and what triggered that to be the move?
Yeah, I think so. There's really 3 big countries in Southeast Asia, right? There's Indonesia, which is like the biggest of them all, right?
Big dog.
With 250-300 million people, you have Philippines and Vietnam at like 100 plus, right?
Yep.
The others are actually much smaller and have their own demographic challenges and so on, right? So it was really a decision between the 3 of them. Philippines, I had a bit of network here and had an opportunity to come to the market, and I think also in terms of how big the opportunity was for that target segment, we were quite happy with Philippines. Right? So we actually three co-founders, not just me. One of our co-founders is from Vietnam. One of our co-founders is from here. So we do.
Let's give him a shout out. Who are they?
So that's Huyen. She's from Vietnam, and Richie, he's from the Philippines originally. So we had good access, I think, to all the major markets. To Indonesia would have been interesting because just it's bigger.
Yep.
But also everybody was focusing there, right? So we wanted to go a bit to the next wave, which initially was very challenging, especially talking to investors and so on. Philippines was not on the map, or like even a negative
Black
factor.
Hole.
Yeah, and but I think that has changed a lot in the last few years. Yeah.
All right, sounds good. Now let's take our first break, and when we come back, we will now talk about again that origin story that you guys talking about. I didn't know that you guys started out in 2015, and all the other hustles that you do to get to this point where you raised Series C. Well, let's talk about that more after the break.
Hey hustlers, money issues and financial stress are a reality we all face, and ignoring them won't make them disappear. That's why our sponsor, Salmon, is committed to making managing your finances easy and more accessible. With Salmon Financing, you can shop to over 2,000 Salmon partner stores nationwide and bring home your dream purchases today with a low down payment starting at just 10%. Plus, it's super easy to apply. Just one valid ID is needed and you can get approved right then and there. No need to wait for payday. Just take what you need now and pay for it over time. And if you're someone that's looking for ways to grow your money, Salmon's time deposit accounts at the Rural Bank of Santa Rosa, Laguna, which is regulated by the Bangko Sentral ng Pilipinas, offers a fantastic 8.88% interest rate for a 12-month term for deposits of more than 500,000 pesos. That's currently the highest rate in the Philippines. Deposits are also insured by the PDIC with up to 500,000 pesos per depositor, so you know your money is safe and secure. It's definitely a great way to make your money work harder for you effortlessly. Since launching in 2022, Salmon has raised over $60 million and is backed by industry giants like the IFC, ADQ, and Northstar Group, ensuring they're a reliable partner in your financial journey. So whether you need financing, credit, or high-return savings option, Salmon has you covered. So visit salmon.ph today to see how they can help you achieve your financial goals with ease. Again, that's salmon.ph. Finance made easy with Salmon.
And we're back from the break. We are still with Georg Steiger, then told us the amazing origin story that he did. But now I'm very curious about the origin story of this. Prior to the break, you told us why the Philippines. And again, there's pros and cons to this. But you mentioned also that you started this out 2015 as not BillEase yet. What were the very first iterations of what you did? And what were you guys trying to build back then?
So the basic idea was always the same, right? It's take a product that is a bit too small or too complex or too expensive for the banks to run, and try to really change the unit economics by a factor of 10 so that it works. So we never wanted to head-on compete with the banks. Of course. One is it doesn't really make sense to compete against someone who is just much better in terms of cost of funds, and two is it's. I mean, there are segments that are pretty well served, right? So why focus there when there's such a big white space, right, that you can go after, right? And so initially we started with a cash lending platform that was called Loan Ranger.
Loan Ranger, okay.
So yeah, we were quite creative on the names. Okay. And then we have another one that's called Balik Bayad, which is focused on OFW loans.
Okay.
Loan Ranger is now.
If Loan Ranger was the one, and then Tonto is Balik Bayad. Tonto is the guy, the Indian with the sidekick of. No, never mind. So I'm geeking out.
That was Balik Bayad.
Loan Ranger and Balik Bayad. I love it. Okay.
And so Balik Bayad is focused on OFW loans. That's still around. But Loan Ranger, we in the end then folded into BillEase because didn't make sense to have two fully online platforms. Okay. BillEase, we started in 2017 with a very, again, simple idea. We said, okay, we now understand the credit a bit. We are getting comfortable with underwriting, but we need to scale more. Why don't we work with e-commerce players because they're investing a lot in growth and payments is a big problem for them. So if you can solve that, maybe we can have a win-win situation. Started initially with just Lazada. So the way BillEase started was just basically we can finance your Lazada purchases. And then from there we expanded. So we added a lot of other merchants. So now we have more than 10,000 merchants on our platform. We integrated with QRPH, so you can go to any shop in the Philippines that has QRPH and pay with that. We then added top-ups, so e-wallet top-ups, mobile load top-ups, gaming top-ups, anything.
Wow.
Added cash loans. Cash loans is actually a very good product for our customers because it's very universal. So we see a lot of the repeat business that we get, and we get a lot of repeat business that goes into more cash loan types loans. So gradually built it from there. Yeah.
Sounds good. But from 2015 to 17, from Lone Ranger into what is now obviously the modern version of BillEase, what were the initial struggles you had to go through? Because if, people always think like, wow, BillEase is such an amazing thing now. There's a billboard, there's Kimchi and Cubao and whatnot. But every single overnight success took decades or years to build. What were the very first struggles you had to go through in order to get that? And how did you realize that, hey, maybe changing the name is such a nice name, by the way, kudos to you. And again, just probably changing the narrative or the manifesto would do the trick. What were the first few struggles that you remember having trouble getting around with?
So I think the first thing we had to solve was really automating credit, right? So that was always the goal, but of course you start with a lot of manual work.
Yep.
So in the beginning, we managed to automate maybe 10-20% of customers, so the ones with credit bureau entry and so on. And then we just basically kept chipping away at that, and I think that was the first very important I would say constraint that we solved. And when you basically manage to automate most of your credit, you can just scale much faster, right? Because then you don't have to build your credit team at the same pace as you want to build your customer intake. So I think that was number one, and that took us a few years to get right, to be honest. So it's not we're probably not the fastest in the market, but we like to be a bit more thorough. Nice. I think the second big constraint in any lending or finance business is funding. So again, we started our first international fundraising exercise actually in the middle of the pandemic. In the beginning, I think it was quite tough to talk to international investors because Philippines was just really not on the map. And often they said, oh, no, Philippines, we don't do. We just do Indonesia, maybe Vietnam.
Okay.
And that has changed a bit. So actually in the middle of our fundraising talks, I think there were a couple of then bigger rounds happening in the Philippines, and that really shifted investor perception. So that helped. And then beyond equity, of course, you have to raise also debt. So we also brought in two debt investors to help us grow the book, because you can't fund the lending book just from equity alone.
Right.
So I think that was the second big constraint that we resolved. And then I think the third one is of course team, people.
Yes, the constant problem.
Yep, that's something where, from our experience, it's once you reach certain stages or certain steps, the game just changes a bit, right? So we grew up a lot, for example, in 2021. Then we in 2022, then we said, okay, now we need to consolidate a bit. So 23, we slowed down a little bit on the intake. And now we're ready again to keep growing. Yep.
It's the rule of 3 and 10. Again, originally told to me by Patrick Gentry, but apparently he stole that from Michael McCullough of KFC Solution. That every time your company multiplies in multiples of 3 and 10, shit breaks. All right, so I know how that feels, because it's the hardest one is when you need to scale back because you realize you grew too fast because there's people involved in all that. So there, I now want to understand a couple things. So you now built these and have overcome all these initial problems that you had to go through. But this is a very cutthroat and cutthroat ecosystem. You have a lot of formidable opponents too. How did you guys acquire the users so efficiently that you still had positive unit economics without having to go to a war of attrition?
So I think I think that's the beauty about lending. To be honest, that's it's a very different market from, say, e-commerce, payments, anything where you have huge network effects, right? Where in the end you will have one winner, and it's a winner takes all game, right? In lending, that's less the case, right? So in lending, there is always room for several players, and that's also the way it should be, right? I mean, you don't would be quite dystopian to have a market where there's really only one lender making credit decisions, because if you don't qualify, then you can never get a loan, right? So I think for a market, it's very important that there's a couple of competing entities, right? And at the same time, the market is still so underpenetrated that it's much less about I steal your customer, you steal my customer. It's more like let's build this market and expand from where we are today to a size that's much more in line with where we should be, right? Because if you look at so again, coming back to the macro, so retail credit penetration, so retail credit volume as percent of GDP in Philippines is at around 5%, whereas in say Indonesia and Vietnam, it's twice that, right? And these two countries are at a very similar stage in terms of GDP per capita. So typically that moves up, right? So if you look at more developed economies like say Thailand, Malaysia, of course Singapore, that would go up to 50%, right? 60%, and we are not even where we should be, given where we are in terms of GDP per capita, right? So and Philippines is now going through that transition into middle income economy. So that's again where they should expect a bit of a step change to happen. You have, as you said, right, a lot of players coming into the market on the lending side, or on the digital banking side. So we think the market will actually develop a lot, and we don't think that this will lead to a war of attrition anytime soon. So I think it's actually good for everyone. Yeah.
No, I love
for the customer.
I love what you said, because again, the more options, also indirectly the customer wins, right? Because if it becomes a zero-sum game and only one wins, the customer loses, because all of a sudden it's only one game and everybody loses also as well, except for that winner where it's also not going to be good, because now nobody's pushing you to be forward to become better. I'm very curious about the cohorts of the type of customers you guys eventually got, because am I correct when I say that the pandemic was a blessing? That's where things blew up, or was this a steady growth trajectory from pre-pandemic to post-pandemic?
So the pandemic was a blessing and a curse, I would say. So in the sense, of course, so again, for payments, this was a bit different, right? For a lending business, the pandemic was not a very comfortable time to be in.
Yes, correct.
Because I mean, in Philippines, it was no work, no pay, right? So our customers actually didn't have money to repay us. So what we did is it doesn't make sense to now push customers who don't have money. So we had very, very liberal policies where we said, if you have no income, then you can postpone your payments, right? We will not hold this against you. We will not charge you penalties or anything like that. And then later on, the government also said, there is like moratoriums and so on, but we always try to go a little bit above and beyond that, because in the end, you don't want to also push a customer who by no fault of his own can't make the payment, right? But then I think actually a few months in, when people adjusted, I think that's really a very good trait of Philippines as a market, is people are very, very, very resilient. So within like 3-4 months, we saw that the market adjusted, customers adjusted, and things started actually turning back to pretty much normal in terms of delinquency rates and so on. So that was the initial shock of the pandemic, I would say. The big benefit that happened is that customers got pushed into digital transactions, and I think one of the big unspoken truth in retail banking is that customers are just extremely reluctant to change what works for them, right? So you can give them better product, better rates, better everything, right? If there's not some external shock, only a very small percentage of customers actually shift and change their behavior, right? And I think the pandemic forced really everyone to at least try out digital transactions. I think the product that really benefited the most from that, of course, is payments. So if you look at, say, Gcash, Maya, all of these wallets pre and post pandemic, I mean, they really exploded, right? And then, of course, for anyone else doing fintech, there were like good effects coming out of that, right? But yeah, that was a little bit at the tail end of the pandemic, I would say.
Got it. Sounds good. Now, when did the rapid growth really kick in, right? Because again, over just the past several months and years, you're at Series C, right? In order to sustain that growth, there must have been that hockey stick really flying. What was the trigger of that, and how did you know that you obviously have product market fit? Because if you won't grow that fast if you don't have product market fit.
Yeah, no, I think if you look at our cohorts, our overall trajectory, we always had a pretty good growth rate in terms of percent. So we were always doubling, tripling, and so on, even in the early years, right? Of course, when you start at a low base, that's not very meaningful. But I think what made it work for us is that a lot of our customers do stick around because they're happy with the product. It solves a problem for them. And if you have that, so you have good retention rate, then any investment that you make in growth, you can make much more confident.
Nice.
and can really start scaling up, right? I think in terms of absolute growth, after Series B, we had the biggest jump, so 21, 22. So where we grew more than 100% from a baseline that was already quite significant. Last year we still grew, I think, 100%. So we doubled last year. Of course, once you reach certain size, you can't keep doubling every year, otherwise you become bigger than the world economy at some point. So we also need to level off a little bit, but we still hope to stay in the high double digits. Low triple digits for a while. Yeah.
Congratulations, man. That's amazing. All right, let's take our last break. And when we now come back, we will not talk about the secrets and the fundraising and how did BillEase survive and thrive over the test of time. But let's talk about that more after the break.
Hey hustlers, wish there was an easy way to open a bank account and grow your money without the hassle of lengthy application process and income documents? Well, I got good news because today's sponsor, Uno Digital Bank, is here to help you achieve your financial goals. You can easily open an account with the Uno app in just 5 minutes and one valid ID. And as one of the 6 digital banks licensed by the Bangko Sentral ng Pilipinas, the company is committed to providing customers with simpler, better, and more accessible banking. Last year, Uno Bank was recognized by the Asia Banking and Finance Awards and bagged the title Open Banking Initiative of the Year due to the success of its partnership with GCash, one of the Philippines' leading mobile wallet platforms. And with the Uno mobile app, you can access an #Uno Ready savings account and enjoy daily interest crediting. With their #Uno Earn or #Uno Boost time deposit accounts, you can enjoy a high interest rate of up to 6.5% per annum. Enjoy monthly payouts with #Uno Earn and flexible tenors with #Uno Boost. Other app features include pay bills, the Uno Virtual Debit MasterCard, life insurance, scan and pay with QRPH, and phones. And the one thing that I really love about Uno Digital Bank is they're open to collaborate with a lot of Filipino startups. I've had a chance to see the partnerships that they've had lined up with the startups that they have, and it's truly exciting to see how a digital bank like Uno can enable startups to unlock the power of fintech through digital banking. So if you're ready to elevate your banking experience, download the Uno mobile app today from the Google Play Store or App Store. Or if you want to collaborate with them, I'll be happy to give you an intro. Just shoot us an email at hello@hustleshare.com. Hey hustlers, how many apps are you using at work these days? 5, 10, 20? Let's face it, there are chat apps for internal communication and emails for external. Cloud Drive for docs and wikis, calendars and video conferencing, spreadsheets and project management software, and probably yet another tool to connect them all. It is a mess. And if you're collaborating with cross-border colleagues, partners, or suppliers, it gets even more complicated. And don't you find it disruptive when your personal and business messages get mixed up? And if this sounds painfully familiar, switch to Lark, the leading super app for work designed to increase your team's productivity by 10x at an unbelievable fraction of the cost. With Lark, manage projects, chat with your team, build a knowledge base with wikis, and automate workflows such as approvals without code effortlessly from one app. No switching or integration needed. Join fast-growing companies in over 125 countries, including Xiaomi, Glintz, and the Philippines' very own Kumu and Mama Lou's, who trust Lark as their workplace super app. I've started using Lark myself for our pressure washing business service, Pop-Up Pressure, and I'm totally loving it. Want to see how Lark can revolutionize your business? Click the link in the description or download Lark for free at larksuite.com. That's larksuite.com, the productivity super app every business needs.
And we're back from the break. We are still with Georg Steiger, then told us the amazing journey that you guys have done and the massive, massive growth. But in the end, even if you have massive growth and that amazing year-on-year growth, you guys also raised several rounds during the funding winter, where there's just a lot of scared money out there, right? I want to understand how you were able to raise properly in this type of environment when 2021 was a totally different type of landscape till now, right? You had to obviously adjust and also optimize for certain metrics. What were that adjustments, and how did you then maximize and do fundraising, and how difficult was it to get it done?
Yeah, so I think it was actually a very interesting process for us. So we actually tested the waters even a year after Series B, because we grew a lot. So we grew about four times in that year after Series B. Mostly because we had the funds, so we were actually able to fund all that growth.
Nice.
Then put out feelers, and that was really at the, I would say, beginning of the winter, where inflation started going up and investors already knew what's coming. So there was just not a very good reception in the market, even though we actually had pretty strong numbers, right? We had the growth, we were profitable. There were some investors that looked at it, but I think to some extent, you also had the feeling that they're trying to make up for bad decisions they made for during
making
the boom
it
years.
rain in 2021.
So we basically, we don't really need it now. So let's instead take a little bit of time, consolidate our growth, make sure that everything works very efficiently, and then go back to market when it looks a little bit better. And we had the luxury of having that flexibility because we are profitable, right? So our decision was not, do we now run out of runway, or basically go for an investor that we might not really want. It was more like, do we slow down for the next 12 months, consolidate, and then go back to market? And that's in the end the decision that we took, right? Because I think it's for us, we are all still very involved in the business. We also put basically our last 10 years life savings, everything into the business.
All in.
We want to make sure it works, right? And we have the right partner, right? It's I think super important that you find an investor that is a good fit in terms of culture, in terms of expectations, return expectations, and that's why we were a little bit picky also in taking these discussions forward.
Well, what did you look for? Because I'm pretty sure you talked to everyone, and you said you're very, very, very particular about the type of people that you let in or you're considering to let in. What type of investors did you want to believe? Because like obviously lately in the Series C, they must have ticked the box, right? But what were the type of investors you wanted specifically that if they're going to get in, what were the characteristics or check marks you had to untick to let them in?
I think really just the most important one is alignment of expectations and vision, right?
Okay.
We are a bit of a strange animal in startup world, I think, because we have been really profitable for the last year, but even before that, we were always very, very close to profitability. So our unit economics have been positive since, I think, second year of operation.
Nice.
And frankly, in lending, that's what you should shoot for.
Mm-hmm.
So we are much more, I think, profit focused and sustainability focused from a financial perspective than I think many other or what some of the VCs, for example, would be looking for. So we will never sacrifice sustainability of the profit for some headline number, right?
Mm-hmm.
And that's really, I think, the main thing that we wanted to make sure that whoever we bring on board shares that outlook. And then the second important criteria is what can they bring to the table to really help you take this business to the next level, right? It's not just capital. It's also what network can they bring, what skills can they bring, what connections can they bring, and so on, right? And I think that's why we're now very, very happy with the investor that we ultimately brought on board, which is the TPG Rise Fund, which is TPG is one of the largest global private equity houses. The Rise Fund is their sustainability fund, right? I think one of the largest, if not the largest, sustainable investment fund globally. So also aligned with our customer first.
Right.
Yeah.
And then does it help that the investor is a PE? Because again, PEs obviously when they invest, for those who don't know, and correct me if I'm wrong, I might be wrong, that PEs typically invest in profitable businesses. They don't care about the big ass VC multiple. They don't want the 10x. They're okay with a 3x, but sustainable and it already has scale. That's how you unlock PE money. And the type of also the type of ticket sizes they make are way bigger than a VC play would do. It depends on the stage at least. But is that correct? Because considering this is Series C, I mean, technically you're right at that echelon. And considering that you're also profitable, that unticks the PE option of fundraising.
Yeah. So I think we were somewhere in the border region where it would have been quite large for VC, or at least a single VC check, and it's been probably more on the lower end for PE.
Okay.
But
nice to be. That's a nice place to be.
Many Series Cs in this region are, right. So you can look at both, and that was quite interesting. But you also either need to stretch up or So it. But I think you say it right, that they have just a different risk profile. So for the VC, it's more important that it can be a 10x play, but they're much more comfortable with risk. For PE, there needs to be already more traction and some factors that can de-risk it for them, because they don't say, okay, I make 10 investments out of which 8 basically will return nothing or zero, and then 2 of them make it so big that it pays for everything else, right? That's a bit different risk profile. I think they also much more structured in terms of, say, due diligence process. So it was very interesting learning. Also very interesting because you look at a lot of things that you haven't looked at in a long time. And quite intense. But we have a great team. So it was very enlightening also for our side.
Sounds good. You mentioned the team, right? And you won't get here if you also did not have massive growth as a leader. Georg, I want to understand how you evolved from 0 to 1 founder to a Series C founder? There's not a lot of you guys who've done that here, right? Probably a handful who've gone through Series C, but every single time, that's why I like interviewing you guys, because you put us, we can only imagine the type of growth and a type of self-actualization you're going to have to go through. Because 0 to 1, it's freaking, it's a bloodbath. And I imagine Series C is still a bloodbath, but you're worrying about different things, right? So walk me through that evolution, Georg, of how you became a 0 to 1 founder to a Series C founders. What did you have to learn and unlearn through the process?
Yeah. Okay. I think to some extent, it was helpful that I saw a lot of different organizations in my previous work life.
Okay.
So at least you kind of see the archetypes, right? Okay. But yeah, 0 to 1 was very different from say consulting, corporate, and so on.
Right.
And yeah, getting things off the ground is of course very very interesting challenge.
Uh-huh.
I think now what definitely helped is that there's 3 of us, right? So there's always a sounding board, and you can always discuss ideas and make sure that you're not getting too boxed into your own fallacies. The change that we see now is that as we're growing as a business, we really need to build out the professional management layer.
Yes.
And of course, that comes with its own complexities, right? Because if everybody in the company is used to working with just like founders, right, where decisions get taken and that's a decision.
Yep.
Things can happen very quickly, right? And now we need to make sure that we, on the one hand, are able to professionalize the management, but on the other hand, keep that speed and dynamism, right? Because we are still way too small to slow down, right?
Right.
If we fall into that trap, then we're not going to grow at the pace that we should be growing, right?
Correct.
So I think that's the biggest challenge now, right? Where do you step back, and where do you still need to jump in and make the decision? Yeah.
Right. Now, how about the culture? That also evolves, right? Because at the end of the day, there are going to be people that are fit at 0 to 1, and then there's going to be different cohorts. Obviously, working with Filipinos, there's going to be some drama in between for sure.
Yeah.
How did that evolve?
Yeah. Look, I think the culture itself hasn't actually changed much, right? I mean, it was always about getting stuff done, putting the customer ahead, and finding stuff that works for customers, right? I think that these fundamentals shouldn't ever change, right?
Right.
In terms of people, I mean, of course, there are some people who nobody stays forever with a company, right?
Yeah.
But we do have a lot of people who have started with us and have shown tremendous growth over the years, right? Who are now in pretty senior positions.
Mm-hmm.
We have also now the good fortune that we are able to afford also very senior people coming in and helping us, right? And I think for the people that are successful in the long run, they also often see that as an opportunity to learn, because of course you can grow organically so far, but then at some point often you get stuck, right? So having more senior leaders in the company is also a learning opportunity for many of the folks who've been with us for a long time, right? But I mean, I think it's a constant change and transition that's happening, right? It's not that ever you're done with that.
Yeah, absolutely. You're always evolving, always iterating at that. But last question before I let you go. What does this unlock? There's probably a handful of you guys Series C boys, and a lot of the Series C peeps that I've seen, man, with great heavy is the head that wears the crown. The type of guillotine that's on your neck at Series C is, and I've seen some people thrive in it, some people buckle at it. Again, at the end of the day, it's a totally different responsibility. But what does this unlock for you guys in BillEase now that you're at Series C?
Yeah, look, for us as a financing or basically finance business, right? Mm-hmm. We need capital to grow. That's always our constraint. Because even if we take in debt, we lever up. There's this core that holds you back if you don't have enough of it, right? Now for this basically solves for us the growth in terms of funding for the next few years, right? That's I think the biggest unlock, if you want, and that basically allows us to now grow as fast as we can in terms of onboarding new customers, keeping developing the product and the propositions that we offer to the customers. So ideally, at some point, we probably want to go beyond of exactly what we're doing right now, so that we can also grow with our customers as they become more mature, as they start earning more, and so on, right? So you have to think about what other products could they want. But in reality, it basically allows us to now really open the intake of new customers, and that's what we're super excited about, right? Because yes, we have grown quite a bit, right? But again, this is such a huge market. We really still barely scratching the surface, right? Not just us, right? Like, you take all the other guys who started in lending over the last few years, right? There's still so much unmet demand that I'm very excited about where this will develop.
Mm-hmm. And again, the beauty about it is it's not zero sum. Y'all can thrive together, but of course, who's leading the charge? It's BillEase. Again, thanks so much for such an amazing episode, Georg. But before I let you go, if people want to reach out to you and work with you, where do they go and how do they do that?
So we are always looking for good people, for driven people who share our vision. So you can email me, contact me on LinkedIn. Anything really works, or just check our website. We have all the job postings there. But if you think this is what we're looking for, right? If you think that you bring something to the table that we should be looking for, please do reach out and pitch it. We're always happy to learn and accommodate. Yeah.
Sounds good. Again, George, before I let you go, follow some whatever podcast app you're listening to, whether it's Spotify, Apple Podcasts, or wherever you listen to podcasts. And if I didn't say some jargon, it's going to be the show notes on hustleshare.com. If you also want to be one of the brands that help Hustleshare spend all these amazing stories out there and share all these stories, please do subscribe at premium.hustleshare.com. Again, Georg, thank you very much.
Thank you.
All right. And I'll see you guys in the next episode. Peace.